GB Cycles with a weekend update on September the 8th. So we broke 4,600 level, and looking at my 4-week cycle in black, we see we have a slight bullish bias a couple of more days before we turn down again. And this scenario here in green, I drew that 2 weeks ago. That was a bit roughly drawn. Actually, we see probably a bit more like this should be correct, and yeah, that fits better with action, price action. Yeah, something like that. Well, I have to redraw this, I guess, in the thumbnail. So I talked about this 5-week rally phase where you don't try selling that rally, and going back here, actually it was more like a 6 or 7 week rally. So the rally doesn't have to stop at 5 weeks, but it did. Here it stopped at 5, and then after a 5-week rally we don't have to have another correction. We can consolidate and then push higher, and that's my general scenario here. After 5 weeks we should lose momentum, start to go sideways, consolidate, and then after a couple of weeks we have the next breakout. So let's go to the hourly data for Dow Jones Industrial. So we are pretty well following my red scenario from last week. Regarding the 2-week oscillation, back here I talked about the oscillations could be disturbed by the Thanksgiving holidays. We lost 1.5 trading days. So actually it looks like this 2-week oscillation is more like this. Here, we lost a couple of days here. And the next one looks like we have started a new 2-week oscillation, and it should top out Tuesday, Wednesday next week perhaps, and then maybe we could get a deeper pullback. So here we have been seeing extremely what I call high momentum, and we were very overbought, but that's actually a bullish sign. That suggests we should have higher highs on less momentum. I have hourly data going back to the year 2007, and looking at similar analogs in Dow Jones hourly data where we have extremely high momentum, and starting from where the rally begins, we see the average here in red and current situation in black. The average is topping out this coming week, but it's not really bearish until, if you look at individual cases here, we have this blue one. It kind of drops down but goes straight back up again. And let's see, we have this in purple here, crashes down but straight back up again. Here we go down, right back up. This one right back up. So it looks like generally these analogs suggest there could be some scary dips here the coming few weeks, but they will be bought probably, and we will regain the top. But around January there's a possibility for a more downside. But then if it doesn't materialize anything really bad, then we could have a continuation rally. So we'll come back to that scenario, because my main scenario is we go sideways rest of December, and then we have the breakout. But I can't see that. Some of these, maybe we have this blue one. Anyway, but I have 2 main scenarios: sideways rest of December, and then in January we have the breakout. or this is a kind of a topping formation into the end of December, and then we could have some kind of correction in January. But then it should be a high low, and then we get the rally. So question is, when is the next rally phase coming? Well, let's skip over to the S&P, my wavelets here for daily data. And I had this primitive tool here looking at my purple wavelet and where is the next, or how to find a market low, or when does the next rally start. And I have this rectangle of about 26 trading days, and we see that's where the low was. Here we went more sideways, but at this point the next rally started. And if we measure from this wavelet top, we see we are about halfway into here. So the low is about 2-3 weeks ahead, but that could be doesn't have to be a deep low. It could be like here, just a sideways action. And there's another thing I'm looking at. I'm here to evaluate this consolidation phase. We are about halfway into it, and nothing bearish has happened. If we go back here, halfway into this one, we were already, we saw major weakness. But if we go into this one, halfway into this one, here we were right back making new highs, like similar to now. So when you get halfway into this consolidation phase and you see nothing bearish, it's a sign that nothing bearish will happen. And any dip you get here in the last couple of weeks, that's where you want to enter your new longs for the next rally. So this looks like bears are, time is running out for bears. They can't produce anything bearish here, and on a dip around Christmas, New Year, that's where then the next rally should start. So I have a scenario from my VIX wavelet. So actually this is how the VIX wavelet looks like compared to the S&P. Here's the VIX, very low. The wavelet is calculated on the VIX, but here I invert the wavelet and compare with the S&P. And the wavelet is going down, market is not. So in a couple of weeks the wavelet should start to turn up again. Market should go sideways and then start to rally. This wavelet is very similar to the purple one for the S&P. Here actually I have compared the two wavelets, and mostly they are very similar. However, you often see the green wavelet for VIX, it's leading the red one. That's why I find it interesting to follow this VIX wavelet, because it seems to often be leading. So it's giving signals earlier than this purple wavelet. So from the VIX, here this shows us a 10-week oscillation, and I can make a scenario based on the average of such 10-week cycles or oscillations, and we see we are here in a channel, or we are in the upper range, and soon we should expect deeper retracements, testing moving averages and so on. But around New Year we should start to rally. But keeping in mind, I haven't shown you those other analogs that suggest this could actually be a long topping phase, and then we break down in January. So I should show you those in another video, but you saw some of it for the Dow data. Here around early January we could see something. But I'll probably make another video later this weekend, so see you.